Visa. I do own this stock for a while and I'm adding even more shares in the coming weeks and months. Visa is the market leader in digital payments and the biggest competitor is Mastercard. Visa stock is roughly down 3% year to date and has come up and down a lot lately. All the reason to do a fundamental analysis to see if Visa is still a buy. In this video I will show you everything you need to know about Visa. I will check the investor presentation, 10K file, fact sheet information, dividends, and in the last part I will tell you if I will buy Visa or not. I'm also going to show you the biggest competitor key statistics of Mastercard. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stock at great prices. Please subscribe to join the community and to receive multiple analyses every week, where I will tell you everything you need to know about the companies. So, Visa is a digital payment company providing transactions between financial institutions, consumers, merchants, and banks. The company's data processing operation generates the largest portion of revenue. Visa makes its profits by selling service as a middleman between financial institutions and merchants. If we check the Visa revenue breakdown, we see that there are four segments: data processing revenue, service revenues, international transactions, and other. Data processing revenues, the biggest segment with 40% of the total revenue. Data processing revenues are the fees you pay, approximately 0.30% for credit cards and 0.11% for debit cards. Visa collects these fees for authorizing, clearing, settling, and transaction processing services for the issuer and merchants acquiring banks. Service revenues, representing 35%. Are the revenues Visa generates from payments volume on Visa branded cards and payment products for goods and services. In other words, the more a product costs, the more Visa makes from processing the payment. For example, they make far more from a jewelry purchase than buying eggs, making the segment inflation-proof. If prices rise, so does Visa revenues. International transaction revenues, representing 90%. Which are revenues Visa collects for cross-border processes and currency conversion actions. These are primarily created from the cross-border payments and volume, traveling to Italy and using your Visa card to buy wine, pizza, and a hotel. These revenues carry larger discount fees because the additional processing service and currency conversion fees. The international segment is typically the highest margin for Visa because of the additional fee revenue. Other revenues, representing the smallest group of just 5%, are revenues generating from license fees for using the Visa brand, any account holder fees, licensing, and certification, a catch-all for additional ad services that Visa offers. In this sheet we see some key statistics for Visa. We see that the volume increased from $11.6 trillion in 2019 to $30 trillion in 2021. Payment volume increased from 8.8 trillion to 10.4 trillion in 2021. Transactions processed increased also a lot, from 138 billion in 2019 almost 165 billion in 2021. The amount of cards increased from 3.4 billion in 2019 to 3.7 billion in 2021. All these numbers are looking great to me. In this sheet we see the payments volume, total transactions and cards for Visa, Mastercard, American Express, GCB and Diners Club. In every metric Visa is the biggest, and even compared to Mastercard, the biggest competitor, Visa is a whole lot bigger in volume, transactions and in cards. Now that we know everything about what Visa does, it's time to check some fundamentals of the company. But first, let's check the historical stock price performance. If you had invested $100 into Visa in 2016, you did outperform the S&P 500 every year big time. You also almost outperformed the S&P 500 data processing index. If we check the 5-year chart, Visa did go up nice and steady every year, and in 2020 did go down because of the coronavirus, of course. Since March 2020, Visa did climb almost 70% up to the all-time high. If we check the 1-year chart, we see that Visa is down roughly 3% because of several things that happened in the market, not because of fundamentals. In the last month, the stock also went up and down, and from $220 to $190. This was the exact time I bought shares of Visa. Normally, I'm not a type of aiming to time the market, but this one was actually a perfect time buy at $180. To be honest, there was a bit of luck there. Since the $190 hit mark, the stock climbed up to roughly $240, which is 12% increase. An easy gain for me, I guess. So now that we know everything about the historical stock price, it's time to check the fundamentals of the company. So Visa is a 425 billion market cap company with an enterprise value of 433 billion. Visa is in the top 15 US biggest market cap companies. Right now they are on the spot 11, behind Johnson & Johnson. Mastercard, the biggest competitor, is at place 18. Right now Visa has a PE ratio of 32 and a forward PE ratio of 27. And here comes my favorite part. Visa has an operating margin of 66% and a profit margin of 51%. Please note that this is insanely high for a company in general. They make so much profit over the revenue. This allows them to do all different kind of stuff with the profit and also to stay the market leader in the business. Return on assets is sitting at 13%, which is above the 10% minimum, and return on equity is sitting at 35%. Also very nice. Visa has a 25 billion 12 trading month revenue and a quarterly revenue growth of 24%, a diluted EPS of 6 and a quarterly earnings growth year over year of 26%, all looking great to me. If we check the revenue per year, we see that it goes up really nice and steady. In 2020 the revenue went down a little bit because of the Roni virus. If we check the EPS per year, we also see that it's going up nice and steady. This is because of the revenue that is increasing, but also the decrease in shares outstanding, which we will check in a moment. First, we are going to check the balance sheet. Visa has a total cash of 15 billion and a total debt of 20 billion. This means Visa is almost capable of paying down all their debt with the cash they have right now, or at least the biggest chunk. Visa has a current ratio of 1.39, which is fine by me. You want this number to be above 1. If we check the cash flow statement, we see that right now Visa has almost 60 billion operating cash flow and a leveraged free cash flow of 12 billion. It's really important for a company to have an increasing free cash flow, because the free cash flow is used to pay down debt, do acquisitions, buy back shares, pay dividends and all other kind of stuff. In this chart we see that the free cash flow is increasing every year. This means that Visa has more and more money to grow the business. So as an investor, you will benefit a lot from it. One of the most overlooked things, and also one of my favorite things, is a company which buy back shares. And Visa knows how it works. In this chart, we see that Visa bought back a lot of shares back in the years. Right now, the decline is sitting at 10% in the last 5 years, which is looking great to me. With buying back shares, Visa will have a higher EPS because there are less shares in the market. A higher EPS attracts other investors, which increases the stock price. Another great thing about buying back shares is that the total amount of paid dividends will go down. When there are less shares receiving dividends, it's more easy to maintain the dividends because the payout ratio is going down and it's easier to increase the dividends. So these are all great things for the investor. Since we're talking about dividends anyway, Visa pays a 0.7% dividend yield, a $1.5 a year. The payout ratio is sitting at 22% and the 5-year growth rate is at almost 18%. Visa grew the dividends for 13 years in a row. To be honest, I would like to see a higher dividend. I think there's some room for more. But Visa likes to keep it at a steady pace. Back in 2017, Visa paid a $0.70 a quarter. Right now they pay a $0.38 a quarter. So the dividends are doubled, which is very nice. The last thing I want to show you is some key fundamental statistics about Mastercard, just to show you Visa's biggest competitor. So, Mastercard is a 317 billion market cap company and is the 18th largest company by market cap in the US. Visa is on spot 11. Right now, Mastercard has a PE ratio of 37. Visa has a PE ratio of 32. Mastercard has a similar profit margin as Visa. Right now, Mastercard has a 46% profit margin and a 54% operating margin. Return on assets and return on equity are also similar to Visa. Return on assets is sitting at 18% and return on equity is sitting at 124%, which is significantly higher than Visa. Mastercard also has a steady revenue growth, similar to Visa, and buys back shares big time. The 5-year share buyback is at 8%, same story as with Visa. The dividends are sitting at a 0.57% dividend yield for Mastercard, which is significantly lower than Visa. The payout ratio is at 21%, and the 5-year growth rate is sitting at 18%. Mastercard increased the dividends for 10 years in a row, similar stats compared to Visa, except the dividend yield. So, my conclusion is that Visa is a great company, even compared to the biggest competitor, Mastercard. Visa is doing a great job. They still manage to grow their business and do a whole lot more transactions versus Mastercard. Right now you pay a small premium with the PE ratio sitting at 32, but to be honest, the financials are looking really great. The debt is at a healthy level, they have plenty of cash to buy back shares and increase the dividends, and the revenue is also growing every year nice and steady. As mentioned before, I do own shares of Visa, and right now it's one of the biggest positions I have in my portfolio. There's a lot of growth in the stock price and dividends for me. I like the fact they buy back so much shares because this means shares will become more valuable every time. If I would have to choose between Visa and Mastercard, I think I would go for Visa. The numbers are similar, but Visa is bigger in volume and has a higher dividend. For now, I think I will slowly add more shares of Visa every now and then. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.